Our focus today is the amazing 20-point drop in Tesla's stock price in the last hour of trading. And our secondary title is The Thrill is Gone, why we don't get our 50-point rises anymore on Tesla stock. This is Greg for Teslafaninsight. Thanks once again for joining us. If this is your first time, welcome. If you're a repeat visitor, welcome back. We also want to thank our Patreon supporters. If you enjoy the show, please take time to like and subscribe as well. If you'd also like some good ideas on investing and trading in Tesla that I think you'll find helpful as we head into the big periods coming up, please join us on Patreon. So today's show, as usual, is somewhat different. We actually got into a period where we were doing every show for a week or two based on intense movement of the stock, related to our earnings announcements or announcements of new vehicles being delivered. So what we typically do for our Patreon supporters is the first 2, possibly 3 days of the week, we usually have an open forum. The last 2 days of the week are shows that are provided to our highest level Patreon supporters. And for this group, on Thursday and Friday, we kind of dug into what the numbers look like for Tesla as the week closed out. So one of the most important numbers that we were taking a look at is the 750 price point. The reason we were targeting this specific price point, and by the way, this is a copyrighted broadcast. Any use of what's covered in this show, etc., without permission is prohibited, and it is definitely copyrighted. So if you have your own channel, please don't copy, because you end up losing your channel. Not a good deal. So one of the things that happen and etc. is that doing the same show on the same set of data points gets very old. So if you go back over the last, let's say, 5 or 6 weeks, we've kind of had the same pattern going where the first day of the week, in this case it was Tuesday because Monday was a holiday, we're getting the stock price jump. Could be 20 points is usually the number, maybe 25. And then all of a sudden we end up with this process where as the week progresses, we get a systematic downdraft of the stock. In the case of this week, we actually ended up sort of in the early 50s, I think on the first day, Tuesday, for that pop-up. And then we sort of rode even up into the early 760s this week. And the feeling was that, hey, this is it. We could be about to take off into great numbers. Now, the way the pattern has been working is that typically on Monday, we end up at this sort of nice height for the apex for the week. And then as the week progresses, particularly by the time we get to about 3 o'clock on Friday, we get to find out what the nadir or lowest point of the stock price is going to be for that week at that point. So it's gotten so routine that it's almost like the point of falling asleep watching Tesla stock price gyrate in this fashion. So what's different and why are we covering this on this show? And the big difference from this week was that we wrote a note to our Patreon supporters on Friday morning indicating that, yes, the stock price was going to open up pre-market. Based on the pre-market numbers, Tesla's stock price was supposed to open up at about 759, possibly hitting for 760. And then I made the comment that in our note to our investors that, yes, we're at 759 right now, but there are 13,000 calls at the 750 level. And then as we drop below 750, even down to the 740 level, there are large numbers of calls there that the market makers might want to destroy. So I made an assessment of the whole thing to just say that I know that the stock price is definitely almost at 760, but the lucrativeness, the profitability for the market makers of destroying the people at 750 and possibly 740 was too delicious for them to allow it to go away, because, hey, we're coming to bonus time. Those guys have to make some money. So when I made the comment, I knew what the principles were. And the reason was that the weighting between the put-call ratio, in my mind, made it clear that every bogey they could hit coming down means more money for the people who are buying puts, etc. And so I figured this would occur. Now, let me take a left side break to just point something out here. In theory, and I'm not saying you should do this, but if you look at the Taleb book that's listed below, one of the things he suggests is taking about $500 to $1,000 and potentially just lighting up on fire. So when the stock was at 790 at the beginning of the day, or 759 on the beginning of the day on Friday, if you bought 750 puts, your cost is probably $150, maybe less, more like $100. And so in theory, with your $1,000, you put in your $150 per, let's say you have your $1,000, let's say 6 units. Now, when the stock finishes up the day at 739, basically those instruments you paid $130 for are now selling for $1,300 a piece, or 10 times your money. So what Taleb's theory is that you should really consider potentially eviscerating $1,000, because if it goes your way, which it will, I think it's 1 over 4 times, you make $13,000 off of that $1,000 investment. So I just wanted to sidebar out to take a peek at that, and now we come back. So I was in agony yesterday watching this happen, because I pretty much had an 80% surety that this was going to occur. When the market makers want to move the stock around, they can. And if they're within 5 points of a target price for the stock, that's a no-brainer. But yesterday was long distance dialing, taking the stock from 759 all the way down to 736 for the close. Wow. It's very impressive, a 20-point cut in only a few hours. So this gets back to other stuff to just point out is when they have a target in mind, note, they're really good at getting the stock price to go there. Now, I'm having a debate right now, and if you could drop a quick note on the bottom, just say yes or no. What happened was I did a show 2 days ago and I didn't post it. And the reason is because I got a phone call in the middle of the show, and therefore I was unable to get the editing done and get it posted. So I produced it on Thursday. What I'm thinking I'm going to do, if you type in yes, is simply upload it to the YouTube. And then what we're going to do is put a link to it, because it's hard to justify loading up a show to the whole channel and everybody when in fact the information being used to make comments has already passed. So please take time to share in that regard. So there's some lessons that come from this, which is why I decided to dive into it, because I think it would get old for me to do the same show every day based on movement of stock. The first lesson is, hey, the market makers are good at what they do. Can they move a stock 20 points in the direction they want in a 2 to 3 hour period? Answer, absolutely. Number one. Number two, understanding the parameters, how and why they're going to do it, very helpful. Number three, my logic point is to really emphasize the need of the small investor. And so I'm kind of in pain when I see a whole bunch of people got excited, they bought the calls, they're ready for the stock price to rise above 50, heading for 60 or 70 and hoping, and they get wiped out. That's a real drag for me. But part of the game here is for me to explain to you what's happening. And then once you see it, you're going to be saying, oh, that's what's going on here. It'll make you more efficient and I think more successful in the process. The third thing So those are a few lessons that kind of pop up. Now, the fourth thing is this. If you understand how this game is being played, particularly how this rope is being jumped, you can then go figure out what the market maker position is and what they're trying to accomplish and ride this ship with them. An example of that being 750 puts. Even if you did 750 puts into next week on a smaller quantity, you'd still make a killing because those things would have tripled in value, and you'd have the safety of being able to wait a whole week for the market maker sort of vibe to play out. So this is a different tack. In general, I kind of stay out of the zone when I think that our investor folks are going to get slammed, and then sort of get in there and try to introduce ideas that might help you to be more effective as an investor trader. So I wanted to run these concepts to you because guess what's going to happen next week? Because we haven't gotten within 2 weeks of when the announcement of production for the quarter has hit. And I really think we're going to start getting cars out of Austin soon, which would really spike the stock. I just feel like there's an environment right now where a lot of people are hoping for a nice upward move to the stock price, and you can see it reflected in the options everybody's buying. And so therefore it's kind of interesting. So I therefore just wanted to highlight all of this to you because a lot of different constituencies in the markets, etc. The final thing I wanted to cover today is, where did the thrill go? The thrill used to be that we'd get a 50-point up or down for the day. If you picked the right side of that, you made some nice money on those options as you had the movement. We've kind of lost that thrill. And we lost that thrill as the S&P introduced Tesla into it. And so that's my final item here, which is, where did our 50 points go that allowed you to make so much money? And I think the answer to this is what I finally figured out, and that is ability to buy control of Tesla's stock price. So one of the differences between a small investor and institutions is that when you're familiar how to work the institutions, you in essence understand certain things. For example, when Tesla's stock price is shorted, where do you think they get the shares that they're using to short? They pay a fee to borrow the shares from large institutions, and then they go from there. So one of the things that happened as we transitioned between S&P and from non-S&P into the S&P is there are a lot more shares that went into the coffers of large institutions. So we're in a zone where the rules are very different. And one of the rules I believe that are there and very obvious is the fact that, guess what? These guys have a real strong interest in using their ability to borrow the shares from the institutions for a fee, and then go in and start playing all kinds of games relative to what we just talked about, moving the stock price around to where they want it to be, buying puts at a time, shorting it in the short term, even pushing it up Mondays, as we've discussed, possibly into Tuesday. All these different techniques are sort of new S&P sheriff elements that have emerged. So, I really think that we've had a lot of data on this. I'm just amazed at the number of times everybody's kind of getting caught in the same zone, which is, hey, you don't want to miss the Tesla run once it's finally going to happen. And the way it tends to jump on Monday, in this case Tuesday, really gives you that great flavor where things are going. And it actually ends up often being a dud, which is unfortunate for all the investors. Particularly, you can just look at the board and see all the people at the 760, 770, all these different numbers with thousands of call options that'll expire worthless. The one number else I'll choose to just run by here is take a look at 750. One of the principal reasons why I picked the stock price to go below 750 is that there were 13,000 calls at 750 and there were 4,500 puts. So it's those kind of ratios within 5 to 10 points of where the stock price is that cause you to just sit there and go, wow, there are, multiply 4 times 3, you got 12. So 16 would be 4 times 4, but you get my drift. It's at least twice, if not almost 4 times the number of calls at the 750 as there were puts. So now we have an interesting, hey, how's this put call ratio going to work out? It's going to work out to destroy as many of those call people as possible because it's very lucrative. So I believe that where our 50-point thrill went is it's now sitting in the hands to control of the hedge funds that basically use institutional money now locked down in the S&P process. The thing I kept thinking about is when you look at how the market dove on Friday, you almost also got the feeling that there was like wait a second here. Are we doing the pin process that we see from Tesla to a number of other firms? Therefore, these guys can gang up and create the Friday they want. So the answer to that is that I haven't picked key high moving stocks, be it Amazon or Google or all these others, but I really think it's worth taking a peek. And again, if you guys would like us to take a peek at those numbers and start playing the ratio game of if they're doing it with Tesla, they'll do it with others, we're happy to do that if you think it'd be of value. But it's definitely worth studying because there are other stocks that are in motion that a lot of money could be made from. So, any rate, I hope this assists you in your investing trading for this week. What am I expecting next week? The same. The reason we're not doing the weekend sort of update thing is that when they spiked the stock on Monday by 20 points this week, 25 points, and everybody has that feeling like this is it again, this is getting tiring in terms of we've already seen it for the last 5 weeks. And so trying to handicap what they're going to do on Monday is difficult for this reason. So if I were to predict the week that's going to occur, it's going to look exactly like this week. But it's possible that the new base for Tesla ends up in the 760, 765 range. Therefore, the base ends up 745 at the end of the week. And then we're up, at the apex in the 770s, 775 range in theory. Any rate, this is Greg for Teslafaninsight. Constructive criticism is appreciated. This is a copyrighted broadcast. You're not authorized to rebroadcast it on your show without permission. We also wanted to next move to our health tips. Before we do have a few SpaceX shares that we shared a few. We ain't got a lot. You have someone that's selling a few. Also wanted to encourage you to like and subscribe. I think this is a critical time to really join us on Patreon, because as we head into the announcement of production numbers and how that's going to hit the stock, this is the time you want to get in to prepare yourself for, I think, some dramatic moves for Tesla using some of the tools we have, be it the 3-day rule or some of the other techniques we've developed over time. At any rate, on to our health tips. The health tips for this week are kind of weird. There's a guy named Dr. Berg who started showing up on my YouTube feed. And I have to say that, man, I am very impressed by him, and I really enjoy. I'm going to try to find the link and put it below. BERG, Dr. Berg. And he's doing a number of eating habits and health tips. And he's got me in this process right now to go 2 weeks without sugar. And so that's the one I'd like to encourage you to check out from Dr. Berg, a 2-week no sugar show. And I guess I fall off the wagon a little bit because I'm like 3 or 4 days in, but I was going to suggest that highly. And I'm impressed by the logic of it, and I'm trying it out and looking forward to good results. But I just think he's very well done, very well researched in theory, etc. And there are a number of other videos he has on there. The initial one he was doing is that one, but I was kind of surprised because the last video I watched of his focuses on the impact of salt, or aerated salt, on better sleeping, etc. And I was kind of surprised by that because one of the studies I have going personally is the fact that it turns out when you're near the water, the fact that water is being aerated, as the water hits the air, you're getting microparticles of seawater that are in the air. And guess what? There's salt in that. And so people breathing that evidently are getting better sleep out of the deal. And it fits with the research that he's representing. One of the other things I was really fascinated by how it affects your body is the negative pH. So when you're in a negative pH environment, it tends to have a better impact on your body. So another potential item to consider. At any rate, once again, thanks for joining us. Tschüss, German, au revoir, French, Lehitro, Hebrew, Khoda Hafez, Farsi, Strazich, Russian, Ni Hao Ma, Chinese, Konbanwa, Japanese, Namaste, Hindi. And in Jamaica, we say, enough respect, walk good. Thanks and have a great day, and bye for now.